Hey folks, it's Sunday, August 9th, 2020, and this is my latest update on my portfolio. So, first thing first, I went back to a buzz cut because I had to go in for a procedure on my scalp. Not to get, too personal there, but I do intend to grow it back. So if you're surprised uh, since the last video, yeah, that's what's new. So what has happened this last couple of weeks since I posted my last video for July? Well, my portfolio has made all-time highs several days for the last week, and that's better than the S&P 500, uh, better than the Dow. I'm not sure about the Nasdaq. I feel like the Nasdaq has been close to a high, but I'm not entirely sure. I wouldn't be surprised. And when I explain what caused my portfolio to do that, you'll see why I wouldn't be surprised if the Nasdaq has hit an all-time high. So I've done this and have beaten the S&P uh, greatly for this year and for the last several years, 10 years. Um, a large part of that is that I have huge holdings in technology stocks. And before we go further, I just want to say that when I say technology stocks, is what most people think of as technology stocks: the Microsoft, the Apple, Facebook, Google, Amazon, those guys. Uh, it's not biotech, even though I like the sector. But sometimes when I mention that I'm in tech stocks, some people get cute and try to get granular with it. It's not the common definition. When people hear technology stocks, that's what they have in mind. In any case, my holdings have gone up tremendously because when I started buying these companies 5 years ago, they made up a really small percentage of my portfolio, under 5%. Oftentimes, it's 3 to 4% when I make a position, just because I don't want to get overly concentrated in one stock or company. This is the whole idea of not putting, all of your eggs in one basket kind of deal. Um, but technology stocks have had a huge run up in the last 5 years. I mean, crazy. Some of my technology stocks have gone up 300%, some 500%. And as a result, even though I've continued to add contribution to my portfolio, and the other stocks that I'm holding have done reasonably well, they haven't done nearly as well as my tech stocks. And as a result, the tech companies in my portfolio have now grown to more than 50%. And a few of them, the really big winners, have grown to 17, 18, 20% of my portfolio. Um, that makes me very nervous. So that's how I've done, these last 2 weeks or so, right? And it's been great. So what I did last week was that I actually ended up liquidating a lot of my technology stocks. Not everything. I use the word liquidate kind of loosely there, but I sold off, major portions of my portfolio. And the main purpose for this video, frankly, aside from just giving an update and saying that I made some new highs, is to really explain why I made the move. Because a lot of people have accused me of, market timing, panicking, whatever, doom and gloom predictions, and all of that. And some of that has a grain of truth. I won't deny it, but I think it oversimplifies things. Um, yeah, it's market timing. I mean, there's no denying it, but I think I have sound reason for doing it. Aside from just the timing of it. So I like to go into the thought process, and hopefully, as you're listening and watching the video uh, in late summer here, uh, it'll help you formulate what you should do in your own portfolio. So, why did I sell? Well, one, it is a timing thing. I feel like some of these holdings have gained so much that they have become risky and overweighted in my portfolio. And I don't want to put all of my eggs in one basket. And it was just time to take the opportunity to rebalance, right, so to speak. So I don't really look at it as necessarily market timing. It's more of a rebalancing for me. Um, the other thing is that I'm really not what you would think of as panic selling, right? Because I'm actually selling at like the very high for some of my stocks and taking profits. So it's really not panic selling at all. But the biggest driver is probably trying to reduce my risk of being too overweight in one company or equity. That's the main driver. The other drivers that I think there are, and there are a couple, and I'll go through them very quickly, are related to the economy at large. I think that there are so much uncertainty with the economy and with the political situation that um, I'm uncomfortable, right? And then there are also risks that I'm seeing that just doesn't match up to the valuations I'm seeing in stocks generally. So when you combine, economic uncertainty, political uncertainty, and just the divergence of stock values to economic fundamentals, it makes me really worried that we're going to have a correction. And that's what's making me make this move. In terms of economic uncertainty, uh, second quarter GDP was down an annualized rate of like 32% or something like that. The most it has ever gone down in our history. Uh, Yet the market treats it as another, oh, just another headline and didn't really react. And I was kind of surprised, right? Unemployment is still high. Um, I think it's sitting at, slightly north of 10% or something like that. Yes, it has improved slightly over the previous figure, but it's still super high. And I don't think that this is going to be resolved anytime soon, right? This is related to COVID because COVID is what kind of sparked these things. Um, but we haven't really solved it in the United States, right? And I'm not entirely sure the rest of the world has solved it either. I do think that a vaccine is going to come sooner rather than later, but I have my doubts of whether it's going to be 2020 or early 21. I'm thinking it's more early 21 myself, but I don't really know. It's a guess. But I think that there's a lot of uncertainty with COVID still that directly affects the economy. And no one really knows. We tried to reopen in some states, didn't work out. It was too quick. People weren't following the recommendations and they had to reclose. And it's just causing, this up and down roller coaster, havoc, uncertainty, right, in the economy. And I think it still will be there. So that's going to be tough. Um, the political uncertainty is this, presidential election coming up in November. The polls right now say that it's going to be Biden's race to lose with less than 90 days to go. And I think the polling is right. Uh, People will say, well, what about 2016? It's bullshit. 2016 had the race very close. Yeah, Clinton was leading, but within the margin of error was Trump. So it wasn't a complete surprise that he pulled it off, right? Um, it just wasn't. So for people who say, oh, it's a huge surprise in 2016, it's bullshit. It's not. It was a surprise, but it wasn't that huge. It was, within accepted margin of error. The result this year is completely different. All signs are pointing to a Biden win unless he really fucks up the situation. So it really is for him to lose. I mean, as it stands right now, things can change in the next 86, 7 days or whatever. But I believe it's accurate. What that will mean is that there will be, some rollback of the deregulation that Trump has done, which I think, will cause businesses to be slightly less profitable, although I don't think by a huge amount. But what I do think will be the result of it will be the reaction from market participants to a Biden win and a Democratic president. They're going to think that it's doom and gloom, and that's going to have an effect. Now, all of these things separately may not be a big deal. Oh, there's one more thing. I listed at the top. I didn't go into great detail here, but just general valuation of stocks, right? Um, it's expensive when you look at the Shiller Cape ratio, when you look at the so-called Buffett indicator, which I think is like, you know, GDP as a multiple of the stock market, or it's the other way around, something like that. Uh, they're all pointing to really, really high valuation at this point, right? By any fundamental measures, stocks are high. They've been on a run. People are expecting great things, and they really didn't readjust with COVID-19. They just didn't. So I just think that valuations are just super, super high. Now, do I have a crystal ball and do I know that it's gonna, go down? No, I don't. But historically, uh, it would revert to the mean, right? At some point, it just has to, because the math doesn't make sense the way it is. If we didn't have COVID, if we didn't have an election, could it still run for a year or two? Sure, of course it could. Um, but at some point it would correct, because while I do believe that the stock market has some irrationalities in the short term, long term it's pretty accurate predictor of the value of businesses that you're buying, whether you're buying it from a value perspective or from a growth perspective. Um, People are rational in the long run, and over the vast group of us. But if you take a moment in time or a short period of time, yeah, we can be irrational. Um, so separately, all of these issues may not be a big deal, but I just think that there are too much going on where one or two of them together can be a starter for a correction. And is it going to be a terrible correction where the world will end? No. So I'm not really a doom and gloom, but I do think that we are due for some kind of reversion to the mean. So some of these events may help precipitate that, and I just see too many signs pointing to that. Uh, about the only thing that is helping to support the market are the Fed actions of just making money available, right? It has other consequences, which I don't think are as dire as some other, folks are thinking, but it definitely doesn't have an effect. Now, how long can that sustain uh, equity prices by itself, the Fed actions? I don't think very long. I mean, I could be wrong, but I don't think very long. So that's what's kind of like propping things up. It's yields are so low with bonds that unless you're buying long-term bonds and hoping to get the capital gains when rates go even lower or even negative, there really aren't attractive options to get better yields. So people are going to stocks. But when you look at stocks, I mean, most of the markets are made up of like a handful of these tech stocks that have these huge market caps. Um, and they're not the market, right? I mean, there are 5 or 6 companies that has what, 20% of the S&P 500 and really drives the result. It's crazy. The rest of the economy is more realistic when you factor out tech. Um, So when you look at all of that, and the gains that I've had, I felt comfortable just moving to cash. So the way that I'm right now, I'm about 45% cash. What am I doing with that cash? Nothing at the moment. Um, it's just in a money market fund that's backed by U.S. Treasuries, and I'll get what pittance of a yield that I can while I wait and see what happens in the fall and later in the winter, and try to make a move. Look for opportunities. I'll talk a little bit in a different video because I don't want to go too long on this one on what my philosophy is for buying. I do have an investor philosophy, even though I don't write it down, so I can't say that I have a investment plan. but I've been doing this long enough that I have a sense of what I like to do. So yeah, right now I'm waiting. I may deploy a small portion of that to maybe one of these long-term bonds and try to play, uh, try to play for that capital gain when rates go even lower than where they are now, which is, inching towards zero to negative territory, right? And the other strategy I have is I put 5% of my portfolio, so that's not part of the cash position, but it's just a separate delineated portfolios, 5%, and I'm trying an asset allocation model where I am heavily weighted in non-US stocks. It's more than half. I think it's like 60%. And it's emerging markets, small caps, non-US, things like that. And then even in the US holding in that portfolio, I'm tilting more towards value and small cap. And I know that it's easy to poo-poo small caps and value stocks at this time, but it's part of my philosophy. I mean, things that are out of favor for no good reason, that's the time to buy them. They're cheap, right? And if you're looking at a longer term to hold them, you should do well, right? So that's the theory. So I'm trying that with this asset allocation portfolio rather than pick individual stocks in that small kind of experimental portfolio. Anyways, that's the update since the last one on the market. And I'm going to try to put up a few more videos, but I'm not really a professional YouTuber. So I just kind of share my thoughts. If you find it useful, you do. And if not, then maybe you're just entertained. Anyways, see ya. Got family coming. Till the next video. Later.